What up? We're sitting outside. It's a cool Tuesday rising, and we're just chilling outside, man. The time now is probably 10 something. I don't have my phone on me, but yeah, guys, welcome, man. It's your boy Ascension Capitals, AC with the co-heat, tapping back in with another video. And welcome, man. It's been a minute. Haven't been posting much, but let's not even talk about that. We're just gonna get back on schedule. Don't talk about it, be about it. Anyway, yeah, guys, I hope you guys have been doing well. Your boy AC hasn't been posting much content, and pretty much this video is just to check in, some transparency, some clocking in with you guys, if you will. But anyway, pretty much haven't really been posting much content since I've blown my personal account, and the latest videos that I posted was me trading my eval for alpha futures, and that account got blown. So it's just like, really lately my psychology has kind of been all over the place, and I've really been taking a hiatus from posting just to really get that all under wraps, bro, because it's like I need some deep introspection, if you will. It's just because, like, me analyzing trading, and I know that it's to a point now where trading isn't really hard. You know what I'm saying? I've been doing a lot of learning and studying and back testing over the years, and gathering, collecting data, and it's just, my strategy works, but my mental frameworks don't, and my self-discipline on the charts don't, if that makes any sense. So it's like, I have to really figure it out, what it is that's really holding me back and that's keeping me from being consistently profitable. And one of the common themes that I've seemed to find myself constantly repeating would be not fully analyzing price action, and not really paying close attention to price action and what's being shown and what's being printed in front of me. And that is big mistake number one, because you always want to be highly alert, highly aware of what you're doing. And a lot of the times I'll overlook some things, and that small overlooking can cause me to misread price action for the whole trend on the day, or allow me to kind of have a mixed bias, if you will. So this has been the combination of misreading price action, trading during afternoon session, perhaps even trading too early. Like, once you first get to the chart, you think you'll see something, but you haven't fully analyzed the whole storyline yet. That over leveraging, which is trying to pretty much rush the process. And rushing the process, bro, it will never fucking work. Like, you guys gotta understand that, bro. Everything will happen in its timing, and you just have to stay narrow-minded and focus on what it is that you want, or what it is, or where it is that you're trying to get, and it will happen, like, over time. You know what I'm saying? So it's like, take every day with what's the word I'm looking for, with ease, with grace, and don't be trying to fucking push the envelope every fucking day and fucking floor it, and taking 3 trades in a day every single day. It's like, bro, that's not conducive to long-term trading results. And these are things that I'm starting to really uncover in my own mind. And it's like, you'll get to a point, maybe you'll get to a point where I am, and it's like, you know how to trade, but you're hindering your own self, basically. So yeah, guys, that's pretty much why I've been missing for quite some time and not posting any today in a day vlogs or any recaps or anything like that since blowing my personal and blowing a few evals. It's just been like, bro, what's going on? I have to fucking, you know, take my foot off the gas and kind of slow down and really evaluate myself, because repeating these same patterns will only yield me the same results. So that's kind of what I've been doing as of lately, man. Realizing what it is or where it is that I can tweak my mental frameworks. There's a chopper in the sky. Can't see it. Where is it? Oh, there he goes. Chopper. But yeah, I just wanted to share that with you guys, man, because I'm pretty sure a lot of growing and developing traders are going through the same sort of phase, you know, and I feel like this is a phase that a lot of traders do go through. And it's just like, when you get to this sort of wall, if you will, I think it's time for some introspection and take yourself back to the drawing board. And what I've come to realize is you have to keep everything very strategic and very disciplined. So what I mean by that is trade your session hours, trade one instrument, trade, I would say max maybe 3 models, you know what I'm saying? And really stick to that, bro, and stick to it over long amounts of time, and try your best not to deviate from your plan. And I'm not going to sit here and say like, you know, deviating from your plan doesn't happen. Like it does happen, but you have to understand the risk that comes with that. So yeah, man, we're back in the freaking lab, bro. We're back in the freaking lab. You know, this week I've been taking kind of a break this week as far as like trying to purchase evals or anything like that, or trade evals or anything of that nature. I've just been fucking paper trading, bro, and locking back in and really getting back in tune with price. And yeah, that's just the best way I can put it, bro. Getting back in tune with price and really understanding my instrument like the back of my hand. So yeah, man, I'm gonna finish out this rest of the week, you know, paper trading, and just to really, you know, kind of get my groove back. And next week I will be starting another eval through Alpha Futures. So I've really been liking Alpha Futures, so I kind of really like their platform, and you know, their pricing and everything, spreads and whatnot, customer service is all kind of top tier. So if you guys are looking to get an eval, definitely try Alpha Futures. So yeah, guys, that's all I really got for this video, man. I just wanted to keep it short and brief. There's 3 months left in the fucking year, bro, and this year, you know, I've learned quite a lot, and there's still so much more to be done, so don't give up on yourself yet, man. There's still potential. You still have potential left inside of you, and there's still work to be done. So the next year we go even harder. These next 3 months we go even harder, and we continue to keep moving forward, and we keep rising. So figure out the mental frameworks that you need in order to succeed, and that will ultimately lead you to where you want to go. So before we get out of here, guys, I want to show you guys a trade recap today. Yeah, let's quickly go over that. Yeah, so paper trading day, took some PL shorts, more of a liquidity hunt, well, actually a liquidity hunt model, and yeah, capitalized on some shorts. So let's get over to the charts and see what that's talking about. Bing bong. All right, guys, what is going on? We are here at the lovely platinum charts. So anyways, so I'll try to keep this recap pretty brief. So this is platinum on the 15-minute time frame here, and I've been, whoa, computer's about to die. That's embarrassing. Not while we're live. Jeez, dude. Alright, so pretty much what we have here is platinum on the 4-hour time frame, and I do like to look at platinum on the daily time frame as well, but mainly I use the 4-hour to get a, my main directional bias of platinum. So pretty much, guys, the current trading range on the 4-hour time frame, as you can see, price has been fairly bullish. On the 4H, see, we've higher highs, higher lows, constantly making higher highs and higher lows, and we put in a shift in structure. So now we have an entire new trading range on the 4-hour, which is 4-hour high to 4-hour low. So now that I know that we had a change in sentiment on the 4-hour, I'm expecting lower prices when it comes to the 4-hour. So I want to see, in theory, remember in theory, because it doesn't always happen how you want it to play out, but if you're following price, it should ultimately do this in theory. So I want to see lower prices come to take out the 4-hour low. Whoa, what a line. To take out the 4-hour low, but that is a longer term storyline. So as you can see, price has had a corrective pullback all the way up into this blind candle, or this valid area of interest on the 4-hour. So we came up to this 4-hour level and we had a beautiful reaction. As you can see here, we wicked into this point of interest and started to show signs of some delivery coming to the downside. So we had that change in sentiment. The sellers are stepping into the market. We had this sort of minor shift here under this internal 4H low. So if we mark out here, this is our internal shift. So now that I've seen that, we had a run of liquidity into this area, and we had a shift outside of this area from this overall level of interest on the 4-hour time frame, is a very, very good sign to me on the 4-hour time frame. So zooming into the 15-minute, which is my intraday time frame that I use to take trades on the day rather than a 4-hour basis, because on the 4-hour basis, obviously we would be swinging that for days to possibly even a week or two. But looking at price action coming into the day, I can see that price is actually bullish. So let me actually rewind price here to the beginning of the day. So yesterday, towards the beginning of the session, we put in a break of structure, which is indicating to me that price is printing higher. So ultimately, I know that I want to see lower prices from the 4-hour time frame, but I don't want to ignore my 15-minute time frame for nothing, because that is my main intraday bias. That is my main time frame that I'm looking at on the day. So I'll be right back, guys. Gotta check in on this YND. Young Nicklet got a hold of some chocolate. He's trying to fucking kill himself. But anyways, guys.
Hello.
Yeah.
When you start your new job?
I don't know yet. I haven't got a call back.
What you doing Thursday?
Auntie Keisha already called me about taking you out to the trip, whatever thing.
Oh, she did?
Yeah.
Okay.
No, I'm talking about the video. Alright, guys. So back to the trending topic of this breakdown. So yeah, pretty much on Monday we put in a break of structure on the 15-minute time frame. So there was no trade idea for Monday. Monday was a no trade day, which is something I have to fucking learn more of, because I usually show up to the charts every day, but I'm starting to realize not every day is a trading day, and often Wednesdays are really dry days, to be honest. Wednesdays are not it. So I'm starting to, collect that sort of data, and I've noticed that over time and time, based off trading Wednesdays. It just hasn't been it. And also Fridays, I don't need to go heavy on Fridays, because Fridays, why would you want to risk the potentiality of giving all your profits back from the week? It's just like kind of silly. If you do trade Fridays, I believe you should go low risk, or if you don't go low risk, have a very short, low hanging fruit sort of target. So these are kind of just things I've been things I've been realizing, and things that I want to add into my repertoire, and ways in which I can tweak my system to better help my performance, if you will. So yeah, so put in a breaker structure on Monday, and coming to the day, we understand that we have our high and low of the current trading range, and we have my M15 swing low, and this is the theoretical low that should not be broken, because it is the impulse responsible for putting in the breakup structure. So ultimately, from this point, I want to see high prices. So during afternoon session on Monday, there was an area of interest on the lower time frame, as you can see by this area here annotated. This area of interest, this was a area of interest on the lower time frame, and I decided to just see if this will hold, because there was no real area of imbalance besides in discounted pricing that was besides this one here. So anticipating price will come and fill this imbalance and come into discounted pricing. If I have my fib tool here to the right, which is I want to see price come into discounted pricing or discounted prices before that delivery up into the draw on liquidity, which would be the 15-minute high. So during around let's get all this out, around 10:45, we had a mitigation of that order block that I had annotated from Monday, and we beautifully respected it. We had a nice wick reaction, and we started to fire to the upside. So when I got to the session today, that was around 7:30, 7:40, well, really 7:45, but I can already see that Asia highs have been manipulated and Asia lows are still intact. So at this point, I'm waiting for a catalyst, and that is the main thing that I always want to wait for, is a catalyst to happen before I'm dropping to lower time frames to look for entries. So the first thing I do, I always want to have my bias on where I think price is going to go, and I want to have my areas of interest on the 15-minute time frame correlating to my bias. So at this time around 8:45, I can see that price is running Asia highs quite nicely. We've already swept it around like 5:15. So during London, we've already swept Asia highs, and we had a small retracement, and then we've come to run London highs in this session. So if I were to turn on session indicator, you can see we ran Asia highs, and coming into pre-New York, we've run London highs. So I can already see right off the back that there is two pools of liquidity that have been already taken, and technically that would be a catalyst, but I want to wait for more of a catalyst to happen during my session. So the London run of highs have already happened. So I always want to keep in mind of my pockets of liquidity. So turning this back off to keep this more concise. Boom. All right. So what I was anticipating for the day coming in on this fine Tuesday, I was anticipating some sort of run on the 15-minute high, and I also forgot to mention that the 15-minute high here, or the draw on liquidity in this scenario, is also previous day's high. So this is also the high from Monday, previous day high. And once I see the previous day's high run, I want to see a shift on the lower time frame to take price lower. So initially I want to see a run on the previous day's high, which is also the M15 swing high, which we know as a pocket of liquidity. So this is nothing more but a pocket of liquidity. And as we know, when pockets of liquidity are breached, there is typically a strong reaction from these points. So waiting for this liquidity pocket to get hit, which is previous day's high and the M15 swing high, we'll patiently wait for that to happen, which is the main catalyst for the session, and we'll see what happens. So this is what I am expecting in general. I won't delete this set because this is the whole idea. Have a lower time frame shift, get in on the retracement back into a premium price, and boom, we take price lower. So guys, playing price forward here, I was patiently waiting to see price run previous day's high. So if I pull this back out, let's keep this annotated for the sake of this mini lesson. So as soon as that got ran at 8 a.m., I dropped down to the 2-minute time frame. So now that I know that this pocket of liquidity is being breached, now I want to see what is 2-minute structure looking like, and where are the points where price would deem valid for a shift. So as I can see, price is already bullish coming into this area. Let's zoom out a bit more and let's start from a significant break within this leg. So I can see we're breaking highs, break of structure, break of structure. Those were the main 2 breaks in price in which I see, and I will actually annotate this a lot better because I want to make it nice and clean. But where is my, okay, it's down here. Okay. So mapping out price, we go high, and this is all internal structure leading up to the catalyst low. We had a break above that high. The deepest pullback before the break will be the low, and then we have the high of the well, not yet confirmed high because we don't have a 3 candle pullback in here, but this was the high that ran through our catalyst or previous day's high. So now I want to map out where could I potentially see a change of character or a shift in structure to make price valid to get into shorts in this market, to see how this liquidity hunt idea plays out. So obviously, well, it's not obvious, but a 3 candle pullback is what I want to really see to really confirm that price has shifted structure, and that is like a hardcore rule of mine. It has to be a 3 candle pullback, and a 2 candle pullback is nothing more than a shift, and the price could shift through a low and then shift right back through the high. You know what I'm saying? So it's like I always want to see a shift. I mean, I change a character more than a shift, but once shifts are more valid, once a pocket of liquidity has been taken out. So in this scenario, if I zoom into price, I can see that this is the internal range of price, but I do see price had this sort of consolidation zone here, and there is a 2 candle pullback in this area. As you can see, we have one bearish candle here, and we have a consecutive candle right after that closing with a body. And this I would deem, whoa, if I can draw it straight, this I would deem as a market structure shift rather than a change of character, because it only has a 2 candle pullback and not a 3 candle pullback. And keep in mind, 3 candle pullbacks are always a lot stronger than 2 candle pullbacks when it comes to liquidity hunt models. So in this scenario, I'm waiting for this low to get shifted before I can look for shorts in this market. So patiently waiting for price to break below this low. That exactly happened at 8:30, and there was, I think there's, what was at 8:30? We had a news driver at 8:30 today. It was retail sales. So retail sales, news driver dropped, and boom, we got exactly what we were looking for. Closed below that low. Now we have shifted structure. Boom. So now I have the green light to look for shorts inside of this market. So now that price has aligned, we have ran through previous day's high, and we've got a lower time frame shift. Now is the time to start to look for shorts. So once price closes below that low, I am waiting for a retracement back up into a valid extreme point of interest or a valid extreme order block. And honestly, the first thing that I'm looking at is obviously would be the impulse that was responsible for breaking through that area of interest, and that would be here. But like I mentioned before, a lot of what I've been doing lately is not paying close attention to price action in detail, and you have to always keep in mind price action in close detail. And that's always been something for me. The more I'm more intricate about price and, you know, very more keen on it, I always tend to perform a lot better. So as you can see in this scenario, we have our market structure shift, we have our alignment on price, we have this imbalance here, and looking very closely, we also have just a tiny imbalance here. So we have 2 areas of interest. And we have one sitting right under another one, or one right on top of the other. And in this scenario, I'm not gonna lie to you guys, my first instinct was to take the impulse that was responsible for the break. So initially I was thinking to get involved from this area with a bit of a wider stop. So stop was looking something like so. I had my stop just above the zone and maybe about here, and I was targeting a 1 to 3, which is my typical target for a liquidity hunt model. I don't usually like to leave runners on the LQ hunt model, but this was my whole game plan going into this idea. So playing price forward here, I was waiting to get tagged in for my idea, and as you can see, tagged in literally right away, literally within the next 4 minutes. We got tagged into the first trade idea, and let's see how this trade idea plays out. It's doing what it's doing. It's stalling around, starting to show signs of it delivering, and ultimately price gets stopped. So that is why I mentioned, guys, paying close attention to detailed price action for me has been something I've been overlooking, and this first area that I was looking to get involved from was nothing more than a trap, and there was still a small imbalance resting just above that with a very, very perfectly bearish order block waiting. So after I got stopped out on that, I realized, well, at the time I wasn't really too keen on the valid extreme, which is this area that I have drawn out now. I was not too keen on that area, just because not paying close attention to the detail and price. And this area was a lot more feasible for me and should have been the initial area that I've gone with. So once price came into this area, I figured this is more fitting to my plan. There was two areas of interest. The one was sitting on top of this one, and I should have gone with the valid extreme. That's something I have shied away from, using the valid extremes of the range. Lately I've been getting cooked with going on these sort of decisional areas and really ignoring the valid extreme of the entire range. So keep that in mind, guys. Valid extreme. So once price mitigated into this area, I was still favoring shorts from this zone, but I was wanting to enter in on the break of the candle rather. So once price broke in this low here of this candle, this one I decided to set a stop limit, and my stop would be just above the high that put in or the wick that put in the mitigation, and a low would still be in the same spot we were targeting, which would be that external low on the 2 minute. So playing price forward here, we'll see how price reacts once we get a break up the candle and we really start to get some momentum. And once we get a break below the leg that put in the mitigation, which would be here, this is when I roll my stop to break even, taking my risk off of the table, and we're seeing how the rest of the trade plays out, and the rest was history after that. So very beautiful trade idea, but like again I mentioned, the valid extremes, man, those play out more often than not, and getting involved from these sort of decisional areas, and there's still areas above where you're trying to get in at that are still valid. It's like you can't miss those. That'll just send you on a world of headache. And I'm going to turn on the executions so you guys can see that I actually execute it in these areas. Am I logged into the paper trading? Oh, it is. Well, damn. I guess they're not showing me my executions. That's pretty lame. Anyways, guys. Yeah, that was the whole trade idea for today. I took a loss right before the win, and the loss could have totally been avoided. So, yeah, guys, that's all we got for this video, man. Oh, nose is itching. Make sure you're staying sharp on price, man, and really staying sharp on your daily life in general, man. Make sure everything comes together, because the sooner we realize that trading is a direct performance or a direct correlation between your life outside of the charts, I think the sooner we realize that that can, directly help you in real time when you're showing up to the charts every day. So yeah, guys, hope you guys got some value for this. Hope I wasn't blabbering too much, but anyways, guys, maybe y'all keep rising, and I'll see you guys in the next one. So peace.